$100 billion? You can't deploy a fund that size in traditional manufacturing without just buying the entire Midwest.
Right? Bezos isn't raising an automation fund. He's buying a Rust Belt index and slapping an AI premium on it.
Oh, come on. If anyone can automate a steel mill, it's the guy who built Amazon.
Show me the term sheet. The math doesn't work.
Well, the math on Blackstone buying into the Global Cricket League is even weirder. We'll unpack all of it right after we hit Pharma's spring shopping spree. The rundown. So Pharma is just treating this week like a Black Friday sale. You have Merck closing in on Terns Pharma for $6 billion, and Gilead right behind them grabbing Ouro Medicines for $2 billion.
The Merck deal makes sense to me. They desperately need to bolt on some oncology assets before Keytruda falls off the pardon cliff. But Gilead? $2 billion for Ouro feels rich. I read the phase 2 trial data last night, and I am not seeing the premium here.
You're always so stingy with the biotech premiums. It's an arms race right now, Maya. Deals over $1 billion are up 319% year over year. Buyers are paying up.
Yeah, well, wait until sticky inflation actually bites into these debt structures. You think Apollo is immune to that? They're dropping $3.7 billion on Nippon Sheet Glass, a Japanese glass buyout.
I love that deal. Japanese corporate governance is finally cracking open. Apollo is just early to the party.
Are they? Because cross-border financing is getting incredibly messy right now. You have escalating tensions in the Middle East, rates are still weird, and Apollo is out here buying a window company in Tokyo.
It's not just a window company, it's an undervalued industrial play. Bank on Apollo squeezing every drop of efficiency out of that glass.
Speaking of squeezing things, can we talk about Blackstone kicking the tires on the Global Cricket League?
Best piece of gossip all week. Private equity's thirst for live sports is completely unquenchable.
It's ridiculous. What's next? KKR buying a professional pickleball league?
Don't give them ideas, but honestly, live sports are the only thing immune to macro headwinds right now. Well, that and makeup. Look at the Estee Lauder and Puig talks. Puig's stock jumped just on the rumor of a combination. People want consumer loyalty. Cricket has 1 billion fans. It's just math.
I prefer my math in SEC filings, which is exactly what I am refreshing my browser for right now.
Ah, yes, the $100 billion gorilla in the room.
Exactly. Jeff Bezos is reportedly raising a $100 billion fund to buy traditional manufacturing companies and automate them with AI.
$100 billion. Do you know how many cricket leagues you could buy with that?
We are going to tear apart exactly what Bezos is planning right after this. The big one.
$100 billion? I just need to say the number out loud to make sure I'm not hallucinating.
You're not hallucinating, though I am highly skeptical of the math behind it.
Maya, it's Jeff Bezos. When he passes the hat around for an automation fund, people throw blank checks at him.
Sure, but $100 billion to buy traditional manufacturing companies. I saw the leak. The narrative is that he wants to acquire old school factories and completely automate their processes using AI.
Which is brilliant. It's the ultimate value play. You buy sleepy, low-margin metal stampers or textile plants, you rip out the inefficient legacy systems, plug in Amazon-level robotics, and suddenly you have a high-margin tech company disguised as a factory.
Okay, stop right there. You're doing the banker thing.
I'm just painting the vision.
You're pitching a slide deck. Look at the actual market data. Yes, large deals are back. We just saw transactions over $1 billion surge by 319% year over year. The AI arms race is real, but deploying $100 billion into Rust Belt manufacturing?
Why not? The fragmentation in that space is massive.
Because of the integration nightmare. Have you ever looked at the capex required to retrofit a 40-year-old stamping plant? You don't just plug ChatGPT into a rusty conveyor belt and fire all the workers.
Oh, come on. You're taking the worst case scenario. He isn't buying scrapyards. He's going to target mid-market industrials. And with financing conditions improving right now, he can lever up and buy these assets at a massive discount.
He doesn't need leverage if he actually raises $100 billion in equity, which, again, I will believe when I see the SEC filings. I read the initial reports and there is zero detail on the fee structure.
You always go straight to the fees.
Someone has to. If you're managing a fund the size of the GDP of a small country, the management fee alone is a $2 billion a year business, even if you buy absolutely nothing.
Fair point. But I still think the macro thesis holds. We're seeing tech valuations get stretched to the absolute limit. Where else do you put capital to get a massive AI productivity bump? You have to look at the physical world.
I agree with the thesis of automating the physical world. I disagree that you can efficiently deploy $100 billion doing it without massively overpaying for the underlying assets. The moment Bezos walks into a factory in Ohio, the asking price triples.
True, the Amazon premium is real.
Exactly. And let's not forget the macro risks. Sticky inflation and escalating Middle East tensions are still huge threats to cross-border supply chains. If you're buying up global manufacturing, you're buying all that geopolitical risk too.
Which is probably why they're starting domestic. But you're right. Execution is going to be a bloodbath. I can't wait to see who they actually hire to run this thing.
We'll be watching the SEC feed like hawks for those structural details. But honestly, while everyone is staring at Bezos and his robot factories, the real money is quietly moving somewhere entirely different right now.
You're talking about the pharmaceutical shopping spree.
Ding, ding, ding. Merck and Gilead aren't waiting around for AI to build their pipelines. Voices.
Every analyst note this morning is using the exact same phrase. AI arms race. They're saying it's driving this massive rebound across tech, healthcare, and energy.
I read those notes. I also read the second paragraph that everyone conveniently ignores. The one warning about escalating Middle East tensions and sticky inflation completely freezing cross-border deals. You can't just wave a magic AI wand and pretend the macro environment is fixed.
But the macro environment is shifting. Look at the data. Transactions over $1 billion are up 319% year over year. That's not just a blip. That's a structural shift. Bezos raising a $100 billion fund to slap robots into old manufacturing plants proves it.
A rumored $100 billion. I want to see the SEC filings tomorrow. Until I see the actual structure of that fund, it's just a really expensive narrative. And I'm sorry, but is Blackstone kicking the tires on the Global Cricket League part of this AI arms race too?
Hey, don't disrespect the cricket pitch. Private equity has a massive thirst for live sports right now. It makes perfect banker sense to me.
Right? Because nothing says algorithmic efficiency like a 5-day test match.
You laugh, but the capital has to go somewhere. If they can't find tech targets, they buy sports. Or they buy makeup. Estee Lauder is officially talking to Puig, by the way. Puig's stock is absolutely flying on the merger buzz.
Which perfectly proves my point. This isn't an AI supercycle, it's just improved financing conditions. Debt is moving again, so people are buying whatever they can get their hands on. Perfume, cricket teams.
And biotech, which is exactly where the real money is flowing this week.
Exactly. Merck is closing in on $6 billion for Terns Pharma, and Gilead is right behind them, dropping $2 billion on Ouro Medicines.
We need to pull up those oncology portfolios because looking at the premiums, I think Merck might actually be overpaying. Spill the tea. I'm telling you, private equity buying sports teams is just bankers wanting cooler luxury box seats.
You really think Blackstone is looking at a stake in the Global Cricket League just for the VIP passes?
Absolutely. Have you ever tried to explain cricket rules to a New York private equity guy? It's basically a structured finance term sheet played on grass. Nobody understands the scoring.
That's entirely unfair to cricket. But look, live sports is literally the last remaining monoculture. Blackstone knows it. I just think they're going to get burned on these valuations.
I disagree. Media rights are basically a guaranteed annuity at this point.
Until the regional sports networks actually go bankrupt. But fine, let's talk about a rumor that actually makes sense. Estee Lauder circling Puig.
Oh, the market loved that. Puig stock jumped the second that leaked.
Right, but why? Estee Lauder is struggling. They're losing market share, so their solution is to just buy the shiny new Spanish beauty conglomerate. It feels desperate.
It's not desperate, it's a bolt-on. Puig has the younger demographic locked down.
It's an expensive band-aid, and with sticky inflation right now, financing an acquisition of that size isn't going to be cheap.
Sure, but the financing markets are thawing. We're seeing a massive deal rebound across the board. Look at the pharma tape today.
Exactly. which is what we need to watch for tomorrow. Merck is supposedly inches away from closing a $6 billion deal for Terns Pharma.
And Gilead is right behind them with a $2 billion play for Ouro Medicines.
Plus, I'll be refreshing the SEC site all morning waiting for the actual structural details on that $100 billion Bezos automation fund.
100 billion. I still can't get over that number. Tomorrow's radar. I am refreshing Edgar every 10 minutes tomorrow, waiting for the paperwork on this Bezos fund.
You actually believe he is raising $100 billion just to put robots in legacy factories?
It is the Amazon playbook for the Rust Belt. It makes perfect sense.
$100 billion, Nate? I need to see the actual LP commitments before I buy that. It screams leaked trial balloon.
You are too cynical. Billion-dollar deals are up 319% this year. The cash is out there.
Fine, but while you chase ghost funds, I am watching real cash. Merck should finalize their $6 billion Terns Pharma deal tomorrow.
And Gilead is dropping $2 billion on Ouro Medicines right behind them.
Exactly. Real pipelines. Oh, and keep an eye on Blackstone tomorrow too.
Right, the Global Cricket League rumor? Private equity's thirst for live sports is totally unquenchable?
I just want to hear Stephen Schwarzman explain the rules of cricket on an earnings call.
Now that is a transcript I will gladly read. Catch you tomorrow.